some of the fast movers here on Wall Street, Diane King Hall. And she'll take a look at some stocks, like you're the fast mover. Right, JB Hunt is first up. Good
that
morning.
is a big mover today to the plus side. And look, they did do better than expected. A surprisingly strong quarter for JB Hunt, despite the ongoing challenges facing the freight industry. The logistics giant beating expectations on both earnings and revenue, and essentially showing that they have mastered tight cost controls and just improved efficiency. We're seeing shares rally more than 15% at the moment, so a big surge there, kind of making up for a good chunk of the lost ground that JB Hunt has had this year. EPS was $1.76, so that was better than expected. Revenue topping $3 billion, $3.05 billion to be precise. That was essentially flat year over year, but again, the number better than expected. Where does the strength come from? The intermodal division. That's a combination of truck and rail transport. It accounts for about half of its revenue. That saw operating income jump 12%. So in other words, there are fewer empty containers moving, better network balance. That helped improve margins and help margins expand for JB Hunt. That strength is key since it's bigger, much bigger than the truckload business. In terms of other segments, contract services was up 90%. Truckload did decline. You saw a decline of 9% because of higher insurance and equipment expenses. Final mile, last mile was actually down double digits, so you saw some revenue slipping there. The take from analysts is pretty solid. Citi saying that the cost control measures were, quote, pragmatic response to a weak freight markets. They rate the stock a buy. They've got a $175 price target. Bernstein is neutral on this one, and they're not, they don't see immediate pricing recovery in freight. But again, JB Hunt having a big day today, and they really needed this move given the year-to-date down. Up to yesterday, the stock was down nearly 20%. So quite a big recovery today.
All right, next up, we turn our attention over to the airlines. What's the very latest from United Airlines?
So mixed results from United, and it's funny, in the pre-market shares were, so you saw a little fight back, but under a little bit of pressure because they'd certainly gained ground recently off the back of Delta's results. They did do better than expected on the bottom line. So EPS coming in at $2.78 per share on an adjusted basis. Revenue, though, came up a little bit weaker than expected. Revenue was $15.23 billion. So it was higher than the prior quarter, but again, it missed expectations. Like Delta, premium performed better than basic economy. Demand for economy did rise, though. That was interesting to me because it was a big increase from the prior quarter. Premium cabin was up 6%. Basic economy was up 4%. And keep in mind, in the previous quarter, economy was only up 1.7%. That's actually, something worth noting there. But again, there's more bang for the buck from premium. Cargo revenue rising 3%. Loyalty revenue increasing 9% from last year. But again, that miss on revenue bothering the streets in terms of their expectations. They're projecting fourth quarter adjusted EPS to come in between $3 to $3.50 a share. That is above expectations, but again, being dinged right now.
All right. I mean, we remember Delta, and so that's why when you say mixed results here for United, but Delta's Delta, right?
Yes.
It's sort of the legacy, best-in-class name in the group, but United down 1.5% today. And then we turn our attention over to the casino gaming stocks, looking at Las Vegas Sands. I think there was an upgrade today.
There is. So Las Vegas Sands getting a little bit of interest from Wall Street today. Shares up almost 1.5% right now. Of that, back of this move from JPMorgan Chase, who's feeling more bullish about the casino operator. They've boosted it to overweight from neutral, raising their price target to $60 per share. So that implies upside of more than 20% from yesterday's close. He talked about Singapore as a big catalyst for the company, the Singapore market. He talked a lot about Marina Bay Sands. Interestingly enough, Sam lived near there, and you could see it from her deck or her patio, whatever you call it, the deck that she had from there. But he talked about, in particular, Marina Bay Sands, the asset quality, high-end gaming play from Southeast Asia. And, not just that, not just the, in terms of people coming and customers coming, but increased table holds, and he sees that driving upside for earnings. Nicole.
All right, Diane King Hall, great to see you. Thank you so much.